It's the day after Liberation Day, as President Donald Trump called it. His reciprocal tariffs on trading partners around the world began, shortly followed by layoffs, price hikes, retaliation, and the market's tanking. Absolute disaster today. The stock market is down. The S&P is down 3.6%. The Nasdaq's down nearly 5%. Gold's down 1.2%. Bitcoin's down 5.5%, all the way down to $82,000 now. Treasury yields are down, so bonds are up. The dollar is down 1.5%, which is a massive move for the dollar. Crude oil is down 7.5% on the trading session. Gareth Soloway is back. He is the president of Verified Investing. Gareth, how would you describe today's market action in a few words?
Yeah, so I think a few words, it would be fear, panic, uncertainty, right? So we have a market where, the tariffs came out and they were worse than expected. And this is a big change from how we viewed Trump in his first term as president, right? He was always concerned about the stock market. And the markets came into this term and said, oh, well, this is great. And that's why we saw the rally from November into January in the stock market. But now he's clearly saying, hey, listen, tariffs are paramount. They're more important. Even if the stock market tanks, at least for now, this is what I want to do. And I think that's sending investors reeling, and it's making us all reprice stocks, like what our valuations should be in an environment where the economy is slowing because these tariffs are freaking everyone out.
All right, is it freaking you out as a trader?
It honestly excites me, and I'll tell you why. As a shorter term swing trader and day trader, the volatility is incredible. The moves, the pops, the drops. This is what I live for as a trader when I can make the most amount of money. Traders and swing traders, they make less money when the market is consistently grinding higher over long periods of time with no volatility. So you see a VIX at 20 or above, that's gravy train for a trader out there.
Yeah, the tariff plan, by the way, imposes tariffs on several countries, including 34% on China, 20% on the EU, 46% on Vietnam, 32% on Taiwan. Worse
Yep.
than expected.
And and just to mention too, I think the 34% is in addition to the 20% that was already imposed on China. So it's really 54%. So these are not small numbers. And I think that's what freaked the market out. Yesterday, when Trump made his announcement at Liberation Day, it was so interesting because the stock market initially went higher because he only talked for the first 10, 15 minutes about the tariffs on automobiles, 25% tariffs. And so the market was like, oh, this is great. Maybe this is all there is. And then he dropped the hammer of a 10% across the board, plus individual nations getting much, much higher, Vietnam, Thailand, and the rest of these. And one of the things that's so troubling here that I think a lot of CEOs are struggling with is they thought they were doing the right thing by moving production out of China over his last administration and diversifying into places like Vietnam. And now Vietnam's getting slammed with tariffs as well. It's really creating a major scenario where Nike, Lululemon, Decker Outdoor, I mean, these stocks are dropping massively today.
Yeah, let's flip over to an S&P 500 chart, Gareth. It seems that Trump certainly has implemented Liberation Day. This is liberation for investors who don't want to pay capital gains taxes because everyone now is in the red. That was a joke. Anyway,
I
let's
love it.
okay. Awkward pause. All right, Gareth. Let's look at the charts here. This is are we in official bear market territory yet?
Well, not on the S&P, right? So the S&P is only down a little over 10% from its all-time highs. The tricky thing is that all-time high was made back on February 19th. And so that is a sharp drop now in just a short amount of time. However, this is the chart that you really got to be worried about. This is the Russell 2000, and the Russell 2000 from its all-time highs, it is now down over 20%. If we take a look right here to the current price intraday, down 21.75%, that is, again, a true bear market on the Russell, which is regional banks and small caps. But there's a light at the end of the tunnel. Check this out, guys. So look at this upsloping trend line. You guys know I'm all about the charts and talking about different opportunities out there. And the one thing I want to just strive and impress upon people is that from panic and fear comes opportunity. Now, maybe not long-term investing. I'm not talking like buy here for the next 5 years, but shorter term, look at the Russell and look at this trend line. This trend line starts back in the COVID low of March 2020. It connects through the next major low here, which was kind of the end of the banking crisis back in 2023. And then look at where we're coming into. This low here and this area right here. There should be a bounce on the Russell. We might go a little lower to tag this yellow line, but we're close to a bounceable level here on the Russell 2000.
So are you buying a dip right now? If you can call
Yeah,
this
yeah,
even a
I
dip?
did. I did. So I did buy certain things today. So for instance, I'll show you guys a few options that or not options contracts, but just different things that I picked up today. Take a look at Amazon. So Amazon, look at this longer term trend line going back to January of 2023. We have a sell off in the magnitude. Look at this sell off here. We've gone from February 4th down to the low today, 27%. High quality name. I'm a buyer here today. And look, it's already bouncing back above that low, trading back north of 182 after bottoming out at 176.92 today. So it's already bouncing, but I would expect us to get at least a week or two of upside off of these levels on some of these stocks. Another great example would be Google. Google right to the low end here, big drop down. Notice again, it's already starting to form a green candle off the gap down. And so, listen, I want to be clear. I still think we're going into a recession. I still think things are going to get a lot worse from here for the stock market. But in a shorter term basis, fear breeds opportunity because it causes panic selling where people aren't thinking about valuations or logic anymore. And therefore, the buying opportunities for logical investors emerge.
Before we continue with the video, let me tell you about the importance of protecting your privacy through VPNs. Using the internet without a VPN is like carrying a see-through backpack. Everyone can see what you're up to. ISPs, advertisers, even hackers. They're all watching, collecting your data, and selling it off. That's why I use today's sponsor, Private Internet Access, VPN, or PIA. It encrypts your traffic through an encrypted tunnel, hides your real IP address, and keeps your browsing private. Whether you're on public Wi-Fi or just don't want your ISP tracking you, PIA keeps your data locked down. If you're traveling, logging into your bank, or making payments on an unprotected network, you're at risk. It's also great for bypassing geo blocks like some finance services for streaming content. If your favorite shows like The Office isn't streaming in a particular country that you're in, on Netflix, you can use PIA. Switch to servers in 91 plus countries and 50 US states to access the full library instead of a fraction. PIA has a proven no locks policy, unlimited devices, and is 83% off, just $2.03 a month, plus 4 extra months free using the link in the description or scan the QR code here. And there's a 30-day money-back guarantee, so it's completely free. Go to piavpn.com/DavidLin to get started. Again, link down below or scan the QR code. Wait a minute, Gareth. Are you not concerned about a further breakdown for these levels if we're touching the bottom channel of this trend line here? Why would you be buying if that's the case? I'm not saying it
Well,
is, but yeah.
yeah, no, that's a great question because I'm a technical trader, right? So I don't worry about what might happen. I worry about what the technicals are showing. And so it's all technical analysis is probabilities. And so if you're looking at this and you're doing your statistical analysis on the chart and you're saying, okay, Google has collapsed here from just, when was this? This high was on the 4th of February. It has come down 27%, much like Amazon. This is $1 trillion, one of the best companies in the world, like Amazon, like some of these other ones. Is it due for a technical bounce of 10%, 15% from here off of a major gap fill and we're right near a double bottom here? Yeah, I would say that probabilities with about 70%, 75% chance favor a bounce back to about 162 to 163. Now listen, I'm not looking for a huge move. You can see clearly this down sloping trend line, but if you get in right here and you bounce here, you just in a matter of a week you can make 10, 12% on this stock. And same thing with Amazon. If we flip back to Amazon and we look at this, again, this longer term trend line, you can see what happens every time, David. Every time we hit this line, what happens? It bounces. It bounces. It bounces. It bounces. And so I'm not trying to reinvent the wheel here for people. I'm just saying, hey, listen, you're down 27% in a straight line and you're into a level that historically you've bounced off of. I'm not going to look for us to go back to all-time highs. I don't think that's happening. But could I make a quick 10% on a 3 to 5 trading day hold? I think so on something like Amazon.
Okay, so overall, then, how are you feeling about the markets? I mean, feeling is not a very scientific word, but do you think that the worst is behind us?
No, I don't think the worst is behind us, and I want to be clear. Like there's no doubt about it. Like let's go look at a few other charts. And these are some major charts here. These are ones that I went over with you in our last analysis as well. And I want to show you this. So if we take a look at this chart, and I'm going to do regular. We're going to use regular charting here. Let me go to my monthly. Here, we have to go to logarithmic. So I'm going to the logarithmic chart. This is what we're talking about. So when I look at this chart, and again, let me just preface this with what this is. This is the S&P 500 on a logarithmic scale, which it basically uses percentages instead of price. And that's how you can look back at history and view it. If we look at this high right here was 1929 before the stock market crashed and the Great Depression. You take a point right there, connect it to the next highest point, which is the dot-com bubble right there. And we obviously know what happened there. If you look at this, what did we just do? We just tagged that line again. So historically, this trend line has marked the major high of a depression and a major bubble collapse, the last one that probably rivaled the AI bubble right now. And therefore, logic dictates that this is just the beginning of the pullback versus the end of it. In other words, sure, bouncing, like I said, 10% bounce on something down 27%. Obviously, that's doable, but you got to be anticipating a much bigger drop in the market. The next chart I got to show you, and this is a great one here. Just look at this. This speaks for itself, but I'll walk everyone through it. COVID low on the NASDAQ composite. So this is the NASDAQ chart, regular chart, no logarithmic. We're just back to regular. So it measures price action. Here we have a very crystal clear COVID low was the low, the high of the bull market, the low of the 2022 bear market, and look at what we just tagged. Look at how this is a perfect parallel. These lines are perfectly parallel. In fact, you can see it's literally the parallel tool on TradingView that I'm using. And this is why in December with you, I called a cycle date and said, this is the market top, guys, because you've hit this line. That's honestly all I was using. There were some calculations on different things, but for the most part, this chart told me everything I needed to know. And look what's happening. Now, logically speaking, what should we expect? Not trying to reinvent the wheel here. If off of this high, we came back to this line, in theory, where's the NASDAQ going? Probably down here. Okay. So again, little things like this make me very, very aware of that the market is likely headed lower, even though it's going to have bounces. And again, a lot of people would say, yeah, but he's talking about being long. But at the same time, we have to look and say, well, why is he bearish? Well, short-term bounces during bear markets are known as rip your face off rallies. They're short squeezes. They will be massive. But overall, during bear markets, quick bounces usually turn into more downside.
Yeah. How likely is it we're going to repeat 2022's bear market? Are we seeing any parallels at all right now?
Literally on the screen a parallel. But that's another side joke.
Okay, yeah, that's a
but yeah,
you and me both full of zingers today.
I know we're on our game. What can we say? So the answer is yes, there are parallels. If you look at in 2021, the Dogecoin rally, to the upside, those type of things, that was very similar to what we saw with Trump coin going nuts just before this collapse. Notice how crypto basically topped out. We always hear about markets topping out on great news, right? Or exciting news. Well, Trump literally topped the crypto markets out with the release of his coin and his inauguration. So there's similarities there. We also saw the AI stocks, these supercomputer stocks going up hundreds of percentage points. All of these type of things mark tops, just like in the .com, where the valuation got so wacky. And again, it was coming into a market or an economy that was slowing. And I want to be clear with people, the economy's slowing. Like the jobs data has still been relatively strong, but consumers are pulling back, and the driver of our economy is the consumer. It's always been that way, at least for the last 20, 30 years. The consumer has been the backbone of the U.S. economy, and the consumer is running. Ask Walmart, ask McDonald's, ask all of these places. They're all telling you the consumer is scared right now, and if they're pulling back on their purse strings, recession is the most likely answer here later this year.
By the way, I'm just going to flip over to my chart real quick, and then I'll let you go back to yours. This is the Michigan Consumer Sentiment Survey. Look at what happened in March. It just fell. Not even fell. It just collapsed. Yeah, people aren't feeling great right now. Just to your point.
Yeah, and one other thing to add to this too, which goes to that same thought process, David, is that we were running on the highs of stimulus, Federal Reserve stimulus from COVID, government spending like you wouldn't believe. That was an additional, it was almost like having two Federal Reserves pumping money into the system at once. The government was overspending and the Fed was doing it. Now the Fed tightened, the government never tightened. So you kind of had this longer bull market than generally we would have. in normal times. But now you're seeing these cutbacks, the spending cutting back. That's forcing people to pull back. Then you hear the fear about all these employees of the government being laid off, and obviously the tariffs and inflationary concerns. And we're even seeing the Federal Reserve saying, hey, listen, we don't know what the heck to do because these tariffs now make it so we can't lower rates like we probably would because it's causing inflation to uptick.
So, Gareth, how are you playing the markets as a swing trader overall then? You've got fear across all asset classes. Gold's down, like I mentioned. We'll talk about gold in just a bit. Bitcoin's down to all the people saying Bitcoin is some sort of safe haven. Well, it doesn't behave like one during times like this. It behaves like the NASDAQ. Oil's down. The only thing that's up today is, I guess, bonds. Yields are down. The dollar is down as well. So is bonds the only safe haven right now?
Yeah, I mean, so it certainly is one of the safe havens, and we're seeing those yields just continue to come in. But overall, for me at least as a trader, I have my swing trading side where I'm quickly going long and then quickly taking profits. Overall, I have some short positions that I've been holding for longer. Those I intend to hold for a longer period of time. And then I'm nibbling on positions in defensive names. And I think this is where stocks that have been out of favor for long periods of time can somewhat come back into favor. And I'll show you guys a couple of these ideas here. So if we flip over and look at like something like a Pfizer's actually up today and it was up yesterday. It's right at double bottom. If you zoom out on the chart, it's been beaten down, trading at a forward PE of 8, paying about a 7% dividend yield. Listen, it's not sexy, and obviously the government is not a big fan of them because of the president and anti-vax type stuff. But at the same time, they're doing fine. People still are gonna need drugs. It's even in a recession, we need our drugs to do what we got to do with our medical side. And these type of names I would expect to outperform. And then if you look at today, other stocks that are doing well, it's like, Kraft Heinz, Procter and Gamble, like defensive names are probably the place to be where they're paying a dividend. Like if it's not paying a dividend, I don't want it right now. Now, normally I'm not a dividend investor. I couldn't care less. I'm a growth stock player, both short and long. But in these times when there's not a lot of places to hide, I'd rather be in Pfizer making 7% dividend yield. And if the stock goes up in addition, awesome. That's just a bonus there. And then you talked about gold, right? While I'm not a big fan of gold in the short term because I think it's overbought, I'm a huge fan mid to long term, right? So listen, back in 2022, we talked and I said, guys, gold's the play. I even said it would beat out Bitcoin. I don't know if it did that year, but it certainly has had an amazing run for two consecutive into 3 years at this point. But gold, again, short term overbought. And just to broach into what we were going to talk about, I think, is you're seeing gold down today. And a lot of investors, right, David, are probably asking you, why is gold down if it's a safe haven asset? And the answer to that is that gold, when you see the markets panic, and this happened at the COVID collapse back in March of 2020, gold went down for a shorter period of time as well. Because people said, I'm panicking, I want to be in cash. Especially in this situation, gold has had such a run. Let me take some off the table there and just sell just to put some money back in cash. Maybe I have to cover margin calls on other stocks or whatever it may be. And I think that's why you're seeing selling in gold. Short term, gold's overbought. Mid to long term, I think gold is the place to be. I still hold my long term positions in gold.
Could it be possible that a downturn in equities could actually pull gold down this year?
It
Does that
is
make sense to
possible in
you?
the near term. I do
Yeah.
think so, right? So I think kind of what we were just talking about in that if you really see a big drawdown in stocks, that fear is very pervasive and people start to look for areas that they have gains that they can literally take those profits and say, "Okay, at least I made a profit of 10% on gold or 20% on gold." And so I think in the short term that could cause a pullback in gold, right? But overall, I think the government. So listen, there's been a lot made about all these cuts in the government, all this type of stuff, these tariffs. I look at what is the ultimate goal of a politician, and it's to be reelected. Now, maybe the president can't get reelected, but a lot of the other politicians can. And they're going to start, if the economy tanks, they're going to start putting pressure to stop the Doge thing. In fact, I even heard Elon Musk might be, ending his tenure at Doge in a certain amount of days. But ultimately, they're going to go back to what worked for them to get reelected, which is spending and stimulus, and so that they can get reelected in 2 or 4 years.
Mm.
And that is going to make gold valuable. And eventually it's going to be what drives Bitcoin. I just think Bitcoin again is a fear-based. Right now it's risk on, risk off with the NASDAQ.
Interesting. And on that note, what do you think the FOMC is going to do? They have their next meeting coming up in April, end of April. And how are they
Yeah.
reacting to this, do you think?
So I think, and we've even heard from some Federal Reserve presidents recently, just saying, "Hey, listen, we have to wait and see how these tariffs affect inflation. Is it going to be a one-off where prices jump, or is it going to be more? So basically, is it going to be transitory? Is it going to be longer lasting? And that's something none of us really know. We don't know if these companies are going to just push the whole tariff through to consumers, or are they going to do it like little bits per year and just raise, let's say, for 3 or 4 years prices? So we don't know. And honestly, we don't even know if these tariffs will last. I mean, Trump has said, hey, close the borders, do this, do that. Maybe we can reduce it. So we don't really have a lot of clarity on that. But I think the Federal Reserve won't raise at the next meeting. They'll come out and say, hey, listen, we're monitoring the economy, we're watching things. And I think later this year they will start cutting. The question is, will it be enough? And I think you're seeing the 10-year, right? If we flip over to the 10-year yield, I think this is a very powerful chart in technical analysis. So this is what we call a head and shoulders pattern. It is a bearish pattern in technical analysis, and it is triggered when the neckline breaks. This is called the neckline. This is a shoulder, head, and shoulder. When the neckline breaks, and you can see it broke yesterday, it continued today, it starts to trigger the likelihood or probability of further downside from this pattern. Now, the way you calculate this is a beautiful thing, right? So what we do is we take a measurement of the high of the head to the neckline. Okay, and this is how we find our target using a head and shoulders. We take that distance, we drag it over to where it broke, and that distance is going to be what you would expect to have yields go to when this pattern completes. That's at 3.47, 3.45% on the 10 years. So listen, it's not going to be a straight down. It's going to be down, bounce, down, bounce, down, bounce. But eventually, this is my target on the 10-year yield.
Okay, we have to turn now to Bitcoin. Bitcoin not having a great day, like I mentioned earlier. It's I did was it you who mentioned to me 70 something thousand dollars as the floor? Anyway, I'll let you answer that.
Yeah.
What right now is the floor for you below which we're entering a bear market?
Yeah, yeah. So here's the current chart. This is the daily chart of Bitcoin. We can see that we kind of had this double top right here. By the way, very similar, just on a smaller time frame to what happened in 2021, right? You had the first high, a big pullback, and then the second high made a slightly higher high, and then the rug got pulled, and we've come all the way back down. This here, this 70 to 74,000 range, which was the previous highs, this is the major technical support I expect to be tagged on Bitcoin probably over the next couple of weeks, if not sooner. That's going to be the first major test of support and how strong the bulls are. Now, I say the first test because let's be fair, and David, I would think you would agree with this, is that if the stock market drops another 20%, Bitcoin's going a lot lower just based on how Bitcoin trades with the Nasdaq, for instance, right? So again, that's going to be the big question: is when we get to 70 to 74,000, does the market bottom out on the stock market side? If so, then Bitcoin probably does too. Otherwise, I think you could go a lot lower here. Last thing I want to show you here on this chart. If you remember in December, I said Bitcoin is topping out. Obviously, I always get a lot of slack for this, but I want to show you how simple this was. All right. And again, this is just using the basics of it. So what I did was when I said this was topping out and we were going to have a bigger corrective move here, all I did was I took the 2017 high, I connected it through the two highs of 2021, and I dragged that trend line out. And look, we literally tagged it here, and have pulled back. And I always want to tell people is that, a lot of people show charts and there's so much nonsense on those charts. Like there's multiple indicators and all this. I'm telling you guys, you don't need that. The simplicity, the chart, if you learn how to read the chart, it's like learning a foreign text, right? So you might have to learn Japanese or Chinese or French or whatever it may be. But once you know it, it tells you everything you need to know. Not perfectly, because no
Yeah.
trader, I certainly have my fair share of bad trades, but it's about probability. And if you can be a winner and pick the right thing 70 to 80% of the time, you're golden in this game.
Right. Are you playing the Bitcoin price action right now as you are with the Nasdaq or any tech stocks?
No, no, right now I'm not. So I do have a couple
Interesting.
small altcoins which have been beaten down like crazy, but they're very small, like 1-2% of portfolio size. But what I am looking to do is if we flush down to 70,000, I will be taking a swing trade there. Now I won't be saying I'm going to hold that long term though, because I'll have to watch the stock market and I'll watch the charts. If the charts, for instance, form a bear flag, well then needless to say, I'm going to start to look for further downside. So I'll let the chart dictate how that trade goes. But right now, if we hit 70, I would absolutely be buying for a bounce.
Okay. I'm just curious, Gareth. So right now we're primed for short-term bounces, but it's very difficult to time bottoms and tops. So let's say I was a complete novice investor or trader, which I am, by the way. And I tell you, Gareth, I don't know how to play bounces because I just can't get the timing right. What should I do instead? How would you answer that question?
Well, first of all, I would say that you're not alone. I even to this day have a hard time. Now, listen, I might get it right more than most people, but that's because I've done this for 26 years now. So that needless to say, you start to get a little bit better over lots of practice. I mean, literally 25, 26 years of practice. What I would say is this, and this is what I employ to protect myself. What I do is I never go all in on my first buy. So the average investor says, this is the best level. I'm going to go all in because I'm going to be right and I'm going to make $1 million. I tried that. It doesn't work very often, right? And so I lost a lot of money. And so what I found is that when things are flushing into technical levels, you say, okay, this is a technical level. I'm willing to put 100K in this trade, but I'm not going to do it all this time. So what I'm going to do is I'm going to divide that into 4 periods or 4 amounts: 25,000, 25,000, 25,000, 25,000. And at the first level, you put the 25 to work. If it drops, let's say 5 or 10%, you put the next 25,000 to work. Essentially dollar cost averaging on things. And that protects you. And I've never made more money in my life than when I switched to doing that. I know it's counterintuitive because you say, well, but if it bounces right at that exact level, well, then you're missing out if you had put the full position on. True. But a good investor and trader protects their downside and worries about their losses, not so much about the gains. The gains will come based on probability. You don't want to get wiped out on a loser.
All right. What is the biggest loser and winner for the rest of the year for you? If we can sum up our conversation.
Way to throw a curveball at me, huh? Biggest loser and winner for the rest of the year. Oh my goodness. All right. So, uh, you're killing me here. I
Well,
mean, things are beaten.
let's just walk through some assumptions. Let's assume that
Okay.
you're right about the economy and that things are going to get worse. I got a
Hmm.
text, I got a text from a friend earlier today. He said, all these people on your show calling for the end of the world, they're actually right. That's what he said. That's not what I said. I'm not saying you're one of them, but I'm just saying that's the
Yeah.
sentiment around the world right now. And by the way, layoffs are happening and probably more will be happening after today's Liberation Day tariffs, assuming they're not rescinded right away. Inflation, we'll see what happens. Sentiment's going to get worse, not better. So I'm trying to find the good news here. Maybe help me out.
Silver lining, right? All
Yeah,
right. So this is the silver lining, guys. I'm going to lay it out to you
maybe
right now.
FOM. Yeah, silver lining. Maybe FOMC more more QE. Perhaps that may boost the market's liquidity. But I'll let
It
you
could
answer.
also boost inflation though, and make
Yeah.
potentially we're nearing stagflation, and that could boost inflation, right? So if they start QE again, but this is the silver lining. All right, so Trump has said he doesn't care about the stock market. The thing is, everyone around him in government that needs to be reelected does. And at some point, if the economy goes low enough and the stock market goes low enough, there will be enough pressure on Trump, in my opinion, to pull back on tariffs. Essentially, he'll claim victory because he'll make some deal where these countries that are tariffing us, maybe it just wipes out the tariffs from both sides. But there will be a point where that occurs and the markets will have massive rallies behind it. In addition, you get rid of some of the tariffs. Inflation could even come down and go negative. And so, even if we're in a recession, at least you have negative inflation potentially or deflation, which again is bad in the longer term. But honestly, in the short term, when you have massive inflation, it's nice for prices to come back in a little bit as well, at least stabilizing in the very least. So, I think the key here is get through this painful period. Be aware bounces will be great opportunities if you're a shorter term investor. I know a lot of people aren't out there, but look for high quality names that are beaten down and dollar cost average. Eventually, listen, 20 years from now, I think the markets will be a lot higher. It just might be some pain in the near term. You got to use it and don't let emotion, right? So, this is the key. Most investors trade on emotion, fear, and greed. Look at the charts, look at the data, go back to logic. You'll do amazingly well.
How much downside can we reasonably expect on stocks and Bitcoin before you're comfortable getting back in?
Yeah, so I mean, just looking at the S&P 500 here, I would start to play for a bigger bounce if we retested the 4,800 level, which was your 2021 bull market high. That would probably be a multi-month long trade, but I would not mess around. I'll show you guys the other big level here. Right here, I would start getting interested around 3,000 on the S&P. And I know that sounds scary, folks, but again, just have some dry powder, right? I mean, again, if you look at this market, right? I love showing this, right? This was your dot-com run. This was your run up into the Great Recession. Look at this. This is the most ridiculous bull market run we have seen, the biggest bubble arguably in the history of markets, maybe rivaling 1929, right? And the roaring 20s in terms of vertical nature. So what you have to do now is say, okay, sure, there'll be a bounce here, maybe a bounce here, but ultimately for me, you get to 3,000 on the S&P, I start to put some serious long-term capital into work in the markets.
Mm-hmm. All right, great. Let's close the conversation here now. I think we've given people plenty to think about already. Where can we follow you, Gareth?
Yeah, verifiedinvesting.com is the place, guys. And just remember the whole goal, and this is what I've learned the hard way. And my goal on verified investing is to help people reach the ability to read charts and make logical decisions. But everything about that website is chart analysis and data analysis that help investors make logical decisions. You know, mainstream media is all about hype, social media is all about hype and all these narratives. People need a place where there's charts and data. And
Yeah.
that's what we do here at Verified Investing. I look at it like the one safe haven for investors where I believe we can come to as a group and get quality information and make our own decisions.
Mm-hmm. Very good. Appreciate it, Gareth. Thank you very much. And we'll put the links down below, so make sure to follow Gareth and Verified Investing down there. I'm David Lynn. We'll speak again soon. Gareth, take care.
Thank you so much, buddy. Take care.